Hello, everybody. Jake here, and wanted to um, do this video on seller financing. I've had a lot of people, a lot of friends, a lot of colleagues who are having trouble nailing down seller financing, and then also not only that, but wondering which exit strategy they should tackle first. Obviously, this is not about finding a house. This is not about finding a buyer. If you're a wholesaler, if it's you, that's great. This is about numbers and underwriting. So, two of the most important things, obviously, when going about finding houses, whether you're going to wholesale them or you're going to take them down yourself, is knowing the numbers and knowing your exit strategy. So, a lot of people focus on trainings of finding the properties and then finding cash buyers. But if your numbers aren't right, then, it's definitely not going to be a deal. So, anyhow, I wanted to show this property here, 419 Columbiana Road in Homewood, Alabama. Now, I'm using this as an example. There is no desire for me to go ahead and make an offer on this property as of right now. But if you want to go ahead and go for it, have at it. So this is just being used as an illustration purpose only. So anyhow, so I'm just going to open up the pictures here, and as you can see, pretty cute house. It's ready to go. I wouldn't do anything else to this property as far as updating. I think it's pretty good. In fact, I think in an offer, I would probably ask for furniture to stay, especially if you're going full price. But, this is definitely a good, short-term rental, it looks like. I mean, this is pretty cool. So anyhow, so you see what the property looks like. So I'm going to click out of there. Now I'm going to go into the spreadsheet here that I created, and on this page you're just going to put the information in: the property address, year built, beds, baths, so on and so forth, how many units. I haven't done any comping on this property, but based on the Zestimate of 370, I'm just going to put 370 for the value, the ARV, and buy price is 359.9. I'm just going to put 350. So on this 350, actually, before I go any further, I want to show you the light green boxes are where you're going to put information, and then the light blue boxes you don't. So you just leave those as is. So after I put in the value and the ARV and the buy price, I'm going to go over here and I'm going to put, say you negotiated a 10% down, and then they'll carry 90% on a seller finance second, or actually a first. You're going to do a $35,000 cash to buyer or cash to seller. This has zero arrears. Cost of acquisition. Now, if you're wholesaling it, you maybe put $10,000 in there. But I'm going to leave it as zero right now, because let's just say you wanted to take this down for yourself. I'm going to put zero. You want to put, if you did a big marketing campaign, maybe put $2,500 or $1,000, whatever you'd like to do. But for illustration purposes, I'm going to put zero. Closing costs are roughly going to be about $6,300. I've got zero rental costs because this property needs no reno. And if you needed any reno, you're just going to go over here under this tab. And, again, this is just ballpark figures. But let's say it's just a lipstick flip, maybe put $20 a square foot. Needs no, let's say exterior, you're going to put $5,000 to make it look really nice. Maybe if it's an Airbnb, maybe put 20, 30, 35 grand, whatever you feel. And then, you're going to get a 15% buffer here. It needs zero addition. So you're looking at about $42,000 on a rehab, on a lipstick rehab. But again, for this purpose, I'm going to put zero and zero. Now, let's say I need to go in there and just clean it up. Maybe put some new carpet in, a little bit of paint. Maybe you can just do this is for exterior landscaping, or a total blanket amount. So maybe you want to just put $5,000 in there. But again, this doesn't need anything, and I would have asked for furniture to stay if I give them the number that they want. So anyhow, let me go back to this tab here, and so the rental would populate over here, and then maintenance, 3 month holding slash Airbnb furnishings. We don't exactly know what the exit strategy on this is yet because we haven't run the numbers. So I'm going to leave this 0, and I'm going to leave the marketing costs at 0, and then we've got a total entry fee so far of $41,300. 0 private money. So we're just assuming at this moment that we're going to come up with $41,300 out of our own pockets. So now we're going to cruise over here and the seller financing details. So the amount of the loan that they're going to carry for you is $315,000, and say you agree to a 5.5% interest rate, fixed for 30 years with a 10-year balloon. So you're going to put 360 months here, and it's going to automatically, we've got a amortization schedule in the background for 2 different things. We got the main seller, and then we've got a seller wrap on an exit strategy amortization schedule. So you're just going to leave those as is, and it automatically populates the numbers. Loan balance after 1 year all the way through 5 years. And then on a 10-year balloon, you would just put 10 years here. And then this is the number that you're going to owe at the end of the 10 years. $260,004.12. Okay. So now, based on this number, your monthly payment is going to be $1,788.54. Cost of capital, because we have 0 here for private money amount, your cost of capital is 0 at this point. Estimated monthly taxes and insurance, I put $325, and I did look that up on the property on Zillow. HOA, there's 0 HOA, so we've got an estimated monthly payment of $2113.54. So now we get down to our exit strategies. Exit strategy number 1, 5-year lease option. Say you want to do it for $375. Somebody agrees to buy it on lease option at $375. On a 5-year lease option, you get 5% down, so you get $18,750 up front. And lease rate, I put $2,500 in here, and I'll show you why. Because on Rentometer, for this property, 4-bedroom, it's saying average about $2,100, median 23, 75th percentile is 2,500. It's a nice house, and in this case, obviously you want to bump up the 5-year lease option payment, so I put $2,500 in there, and you might be able to get more for that, but in this instance, it's kicking us out of $386.46 net cash flow per month. So exit strategy number 2 is a long-term rental, and again, based on this $2,100, maybe put $2,300 in there. It's all up to you. But let's say we're going to do $2,300 a month. Vacancy loss of 4%. You can put your numbers in here however you feel fit. 4% vacancy loss. It's kicking out $92 a month. So the total operating income is going to be $2,208 a month. And then you got repair allowance 4 to 6%. I put 4%. Property management of 10%. Accounting and / leasing fees 4%. Which kicks you out a net cash flow of negative $312.18 per month. So let me go down to the exit strategy number 3, which is medium term rental. So I went over here to traveling to furnish finders, and I put in Homewood, Alabama, and I just did a room with a shared bathroom, not the entire unit. And I'm just kind of getting an idea of what a furnish finder would kick out for traveling nurses. Based on this criteria, and it's looking like it'd be about $1,000 a month per room. Yeah, so about $1,000 a month. So I went ahead and just put $1,000 times 4 rooms, so $4,000. And then my occupancy rate, I put 83.33%. You can adjust that however you want. I know some people who are doing midterm rentals that are booked out every month. This 83.33% is based on 10 months out of 12 months. So just in case you're not occupied for 2 months of the year, why not obviously be safe? So that's giving us a midterm rental average monthly rent of $33.20, and then we've got repair allowance of 4%, property management 10%. I put in a cleaning fee of $150 and then miscellaneous CapEx of $75. That'll be for your toilet paper, just to furnish it or stock up again after somebody leaves. Obviously, when somebody gets there or multiple people are there, then you're going to be looking at, they're more than likely going to get their own stuff, their toiletries, whole 9 yards. So anyhow, so I just put $75. In fact, I might just bump that up to $150. So based on these numbers, now, obviously if you book it out 100%, numbers are going to change drastically. But, for this purpose, I'm just going to put 83.33%. So now we've got a net cash flow per month of $453. And that's after all expenses. So, not too bad at all. Now we're going to go down to the short-term rental, Airbnb. So what I do is I go over to AirDNA and I put the address in on the rentalizer. And this is a 4-bedroom, 2-bath. I figured 6 guests. I could probably bump it up to 8 guests. But 6 guests are giving me a $262 average daily rate at a 59% occupancy rate. So I'm going to go ahead and put those numbers in. 262 at a 59% occupancy rate gives me about a monthly income of $4701.81. Now, the cleaning fees are around 15% of your Airbnb fees or Airbnb numbers. So I'm going to back that out right away. So 15% of this number is $705.27. And I've got repair allowance of 4%, property management 10%, Airbnb fees $141. So essentially what I've done here is I've got 15% here, 4, 3, and 10. So 15, 25, 29, 32. So 32% basically of all of the total Airbnb rents is going to be going towards fees. 32% in this case is going to give us a net cash flow per month of around $1,100. Not too bad. Actually, it's really nice. So now we drop down here to exit strategy number 5. Exit strategy number 5 would be on a seller wrap. So say you sell it for $375 and then you get a down payment of $37,500. This is the amount financed, and again, I've got this in the amortization schedule on the back end here. And say you come up with a 7.9% interest rate over 30 years, amortized over 30 years, but you still have that 10-year balloon because you have a 10-year balloon on the buy side. So your buy side balloon would be 10 years, 260.04, and on this, your 10-year balloon would be 295, 457.44. So that's what they would owe you at the end of the 10 years. But let's go ahead and get into the numbers here. So we've got, based on the 7.9% on a 337.5, we've got a 24.52 payment. Obviously, you're going to put in the monthly taxes and insurance, HOA, if there's any there. And then the pity is $2777.97. And then I've thrown in an accounting payment servicing fee of 4%. Or, if you want to put this at 10%, I don't recommend it. But 4% gives you a negative 111.12. So this kicks you out a net cash flow per month of $553.31 a month. So based on these numbers, so that's 5 exit strategies. We kind of get a bigger picture of what we're looking at on an exit strategy. Now, let's say based on these numbers, I'm like, okay, well, my midterm rental, my short-term rental is going to be the best, right? $1,000 a month, but we don't have it furnished. Now, in this case, I'm going to go and I'm going to make an offer that is going to include furniture. And if I have to buy it at a higher price, then so be it, right? So say we give them a full price offer of $360 and we give them $40,000 down. Well, our short-term rental, we're still making $1,055 a month. So, and that's asking for all the furniture, everything in the house except for the toiletries and their clothes, obviously, right? So, so I would do that. So that what that's going to do is that's going to help me from not having to get $20,000 of furniture or $30,000 of furniture. So now I would go in here and I would massage these numbers on the entry fee. So my entry fee, assuming that they said, yes, I'll give you the furniture, everything's included, you're good to go. I'm going to, buy it at 360. And my maintenance now is I've got $2,141 payment. So I'm gonna assume 3 months of maintenance. So I'm gonna say $6,500. And my marketing costs, I'm gonna put $1,000 because I need some marketing expenditures to get some people going in Airbnb. Maybe get a Airbnb expert, listing expert to get you ranked, high. So say you're put $1,000 in there. So now we look pretty good here. No arrears, cost of acquisition. Say you want to put $1,000. In fact, I'll just put $2,500, assuming that this was a marketing campaign or whatever. So $2,500 for your cost of acquisition, $6,400 for closing costs, zero on rehab, $6,500 for holding costs, and a marketing of $1,000. So my total entry fee now is $56,400. And again, I don't have any private money into this as of this moment. And the reason why I'm doing this is because, I could probably bring a private money investor into the fold, give them 12% on their money. But I want to see what the numbers look like if I have the cash. If I have the 56.5 or 56.4, what do the numbers look like? What are my cash on cash returns per year based on this number if I don't have to bring any money or if I bring this money to the table myself? So again, I know pretty much without a shadow of doubt that I'm going to be going towards a long-term rental is definitely not it. Mid-term rental, maybe. If this was 100%, if you could guarantee that you can get it 100%, you're making $1,000 a month. I wouldn't guarantee that. So, I'm thinking 10 to 12 months, 10 out of 12 months. But short-term rentals definitely pretty spicy here, right? So I'm going to see what my numbers look like. So this is where I come over here to the detailed project info page of the tab. The detailed project info tab is going to break down everything for me. So, and it's going to tell me whether this is a buy or not. So I've got my seller finance project info, $370 on the ARV, $360 purchase price, $320 seller financed amount, zero rehab, entry fees $56,400, and my total loans will be $320. So my loans obviously encompasses my seller financed carry, plus if I brought private money to the table. So this would be that number. My total cash requirements are $56,400. My private money info, I have nothing in here, and I would, I like to request for 5 years for seller finance. For my private money. You can put this whatever you want, 3 years. It doesn't change any numbers. If you want 1 year and you want to just go find some other private money lenders and come in, but I'm gonna start off asking for 5 years. So now we come here down to the 5-year lease. So the 5-year lease option, as we remember over here, 5-year lease option is going to give us about a $350 monthly cash flow. But I'm gonna, that's gonna automatically populate over here. Your exit option fee up front is gonna be $18,750. Cash flow per year is this $42.96. So your first year cash on cash return on investment is 40.86%. Now that looks amazing, but that's including the $18,750. So I've got an ongoing cash on cash return as well. And this is 7.62% because you're $4,296 cash flow based on $56,000 requirement. So this is, you're going to get a debt reduction of 4310, ROI on that 7.64. So realistically, your ROI just from the debt reduction and the cash on cash is going to be around 15%. But a lot of people like that cash. So is this a deal with a lease option exit? No. And then you come over here, you got your gross operating income, $30,000, your expenses, your NOI, your cap rate, your debt service, your net income, your DSCR, and then the factor rate. So the factor rate is what is the amount, the money that you're spending on the home, what's the total? What's the cost of the money? A lot of people will say, well, I got a 5.5% interest rate. Well, no, that's not correct. You've got all your expenses as well. And, any kind of expenses that go into this is going to go into this number. So you got a 6.81% true cost of your money. So the debt yield on this is 8.16%. So it's over it, which if you're at a 6.81%, you need to make over that 6.81% on your money for your debt yield, or you're not making any money, right? So again, but this is kicking out a no. Now, some people might be happy with a 7% cash on cash return. I'm not, and I know a lot of people that I know aren't. So now let's drop down here to long-term rental. So the long-term rental, we already know that this is a no because it's a negative cash flow per year. And you can see here, obviously the factor rate is going to be the same on every single one of these, but the debt yield is under the factor rate. And then, DSCR is 0.81. It's crazy. So now we got a midterm rental. So midterm rental, we've got cash flow per year, $5,000, say $5,100. Your cash on cash return is 9%. And you get your depreciation in here, your debt reduction. So, say 16.5% return on your money with debt reduction. Now on the houses, I don't have the appreciation amount in here, and because right now we're not in an appreciation market. Some markets might be, but I left it out of there. So debt reduction, depreciation, and cash flow. So this is telling me I've got a 7.47% cap rate, net income, DSCR is 1.23, factor rate, and my debt yield, and a no. So we've got a no on this strategy. But now we go to exit strategy number 4, short-term rental. So my short-term rental, my monthly rents are $4,701, monthly payment $4,600, cash flow is $12,600, cash on cash return is kicking out about a 22.45%. So including your debt reduction ROI, you're looking at about a 30% ROI on this property, not including your depreciation. So we come over here and your cap rate's at 9.57%. You've got your DSCR 1.58, factor rate again at 6.81, and your debt yield is at 10.77. It's pretty good. So is this a deal with an STR exit? Heck yes. I've got a few different formulas in here that kick out certain different phrases. So this is a heck yes. So now we go down to exit strategy number 5. Is this a deal? No, because we got 11% ongoing COC. Even though we got a 1.29 DSCR, cap rate 7.81. But so as of right now, based on no money for private money, on a $56,400 cash requirement, you are going to be looking at a heck yes for your short-term rental. Now, let me go back over here and I'm going to manipulate this a bit. So let's say we're going to bring $56,400 to the table with private money. So now we've got zero out of pocket. So now let's go back over here. Actually, let me go drop down here and show you the difference, because now cost of capital is $564 a month. So now your payment's $27. So now you're losing money on the 5-year lease. You're losing money on the short term, which you already were. Midterm rental, you're losing money. And short-term rental, you're making $500 a month. Now, is that not bad for having no money out of your pocket? Yeah, absolutely. It's not bad at all. So now here's our numbers for the private money, and total yearly payments of $67.68. And obviously everything's still a no over here, but then we come down here to our short-term rental. So is this still a deal? Based on the total amount of money of the entry fee, the total entry fee on this is $56,400. no money out of your pocket, but you're getting a return of 58.95.66 a year, with no money out of pocket. We got a DSCR of 1.21, a 9.57 cap rate. Is this a deal? Now, some people might not think that it's a deal, but they've got zero out of their pocket. Some people might be like, heck yes, I'll take $6,000 a year with no money out of my pocket. And everything's covered. I've got my private money lender paid, whole 9 yards. I've got furniture already in the property. So I'm good to go, and I'm happy with this $6,000. So if that's you, maybe this is a property for you. Either way, if this is you or if it isn't you, actually first let me go ahead and go over here to the project summary. So the main page, if you were to present this to a private money person or a partner or whoever, this is the page you got. So we've got the property information, analysis, purchase price, finance. This is the total amount financed because you've got private money in there now. 56.4, which is that number. Possible exit strategies, those 5 exit strategies. Total cash requirements, you've got 0. Cash flow, negative, negative, negative. $500 a month, negative. Cap rates. Cash on cash return. So cash on cash return is obviously infinite, right? Even though it's negative, it's infinite because you've got no money in the project. So, but obviously these are all no's. So this one says, heck yes, I'm going to probably jump on this. And again, back to what I was saying earlier, if this is you or if this isn't you on this property, no worries. But what I do want to say is that I'm sure you would like to get your hands on this spreadsheet. If so, I am offering it for free, and you just go ahead and go to the link down below in the first comment and go ahead and grab it. Or reach out to me and ask for it if you don't see that, and I'll go ahead and send it over to you. So anyhow, hope you have a super day and take care.